In general, the mutual dependency has remained in place. Europe still requires, and has in fact increased slightly, its take of Russian gas, to the extent that we see a slight increase from around 43%, slightly upwards over the last couple of years. There's a few factors that are in play there. In the last 2 years, or comparing this year to 2 years ago, Dutch production will have fallen by close to 30%, meaning that actually there's higher import dependency in Europe at the moment. Even though we've been able to add to that some more LNG coming mainly from Qatar, it does mean that Europe actually is taking more Russian gas than we were 2 years ago. We haven't noticed a discernible impact on gas flows from Russia to Europe, nor on, for example, Russian LNG exports to Japan. In general, we would say that so far there's been a very limited impact of the sanctions on the gas market, albeit that there was a small amount of risk in the markets about 12 months ago. That has dissipated. And to the best of my knowledge, the situation is quite similar in oil, that Russian production has in fact continued to grow. And overall, you can say that Russia has not had, or the sanctions have not had, a significant impact on energy and commodity markets to date. Diversification of supply hinges, as it should, on the price of one source of supply versus the price of another source of supply. And what we've actually seen over the last 12 months, driven by the change in oil price, we've seen Russian gas become systemically cheaper. And in fact, going into next winter, we expect Russian gas to be cheaper than hub prices. So the overall picture I'm painting here is one where Russian gas is very price competitive. Now, how does that compare to other sources of supply? Even though Norwegian gas has also become cheaper, there isn't the capacity there for Norway to replace any Russian gas. Now, Algeria faces the same production pressures it's faced for several years, and its volume of supply to Europe is much smaller. So in that sense, we don't see Algeria as being able to overtake Russia or replace Russia in any sense. Now, for LNG, it's a very good question. There is more US gas coming on from Q1 next year. There is more Australian production, and the Qataris continue to be a world leader in LNG production. That is quite price competitive, and especially in a scenario where Asian demand may be stabilizing or only growing slowly. Now, how price competitive that will be will dictate how much change there will be, or how much diversification away from Russian gas. But it is still important to remember that domestic production in Europe is declining, and that means that there will be more dependency for imports, and we actually don't see that there will be any concerted move away from Russian gas in the near future, or even slightly beyond that into the next decade. I do not have a crystal ball. I can't tell, for example, where we're going to be 10 to 15 years from now, but what I can say is that in the last 5 years, Gazprom and Russia in general has brought on some significantly large gas fields. Bovanenkovo is, for example, a significantly big field, and we anticipate that this field will continue ramping up as it is planned to do. It was the third most expensive upstream project of all time, and it's been a successful project in helping increase Russian gas production. And it shouldn't reach its peak until, say, 2020, I think it's planned. Now, that is very important for Russia because this is already paid for, this is done. The gas reserves that they are exploiting are relatively conventional, and we do not see technical or technological barriers there that would prevent that gas coming out of the ground and then being used by Gazprom and other players as gas exports. So in that sense, again, the sanctions do not really impede future Russian gas production because that gas is easier to get to market. But that isn't to say that there couldn't be some negative aspects, or that it might decrease, say, Gazprom's own ability or wish to pump more money in for extraction. However, we are also noticing, and there is the fact that there will be Russian exports to China. That will lead to more eastward flows of gas. Some of that may be taken away from gas that could have gone to Europe. But again, we're not talking about massive volumes going to China. It's roughly a quarter of what goes to Europe. And so in that sense, We don't again see any major threat from the sanctions or from forthcoming trends that would lead to Russia, for example, not being able to feed European demand or moving supply away from Europe and toward Asia. Within research and forecast at Thomson Reuters, we have a strong history of being a market leader, providing fundamentals-driven trading analytics. That supply and demand for European gas, collecting data from thousands of sources, crunching that and using it to provide clear, insightful analytics to support the trading activities of all of our clients. And it's not just a daily basis that we provide this on, but we go beyond that, providing ad hoc research, providing contact time for our clients so that we're able to take our daily reports and turn those into something more in-depth, that provide on as much feedback as our clients may wish so that they can test their own models, get our own insight, and in many cases go above and beyond what our clients can do for various across the commodity sector and within European natural gas.